Good afternoon, ladies and gentlemen. Welcome back to the 28th of April weekly market review. Today I have with me Mr. Gerald. How are you, Gerald?
Hi. Well, we are very fast, close to the end of April already. Almost one third of the year is gone. At the same time, we have seen various developments in the market still relating to the trade war. So hope to be able to share some of the updates with our viewers today.
Yes, we just finished the Good Friday holiday, and this coming week we also have another holiday, so it will be a shortened trading week. And of course, with one eye on the election that's coming up on the Singapore side, I think there might be some sort of attention that is brought off the market, so the market might be lackluster on lower volumes going forward this week. But then that cannot be said for the global markets because last week we hear from the US side and Donald Trump on his softening of the tone on the trade tariff or the tariff war. But then there were some contradicting statements on the Chinese side, which said that there were no trade talks ongoing now with the US. So markets are getting impatient on the progress of the trade talks, and the 90 days sort of a pause on the tariffs is we are going into the countdown stage already with 30 days gone. So I think going forward this week with a lot of Singapore companies announcing their results, as well as some of the big tech companies in the US side like Meta, Microsoft, Apple, and Amazon reporting their results this week, markets will still be very active on the global side. So we do need to keep a watch out on what's happening. So I'll pass the time to Gerald to go through with us some of the details happening that happened last week.
Thanks so much, Sunny. The usual disclaimer that today's sharing is for informational purposes only and should not be taken to be financial advice. If you find the weekly market review helpful, do leave us a review on Google. And if you'd like to join SIAS as a member to access various online resources as well as investor education programs, you can scan this QR code or go to the website sias.org.sg/membership. So what we saw in the market last week was a fairly strong rebound. The S&P 500 is now back to above 5,500 level, following a 4.6% gain in the past week. Nasdaq was the star performer here, up 6.7% in the past week, as investors start to look out for the earnings season, while we have seen some of the companies, such as Alphabet, having reported in the past week. So, like Sunny mentioned earlier, we still have a lot of headlines around the trade tariff. For the time being, there seems to be more signs that there seems to be some easing of the trade tensions between the US and China. Donald Trump actually mentioned that he expects some of these talks, not just with China, but other trade partners, to be concluded within the next 2 to 3 weeks. So that is providing some optimism to the markets in the near term. In Singapore, we saw a 2.8% bounce in the STI. So now we are once again back to above the 3,800 levels, not too far away from the 4,000 level, which was the high that we saw recently. In the meantime, what we have also seen is a weakening in some of the economic indicators. So in the US, we see that the US business activity growth is now at a 16-month low. This is reflected in the S&P Global Flash US PMI, where effectively, if you look at where it is currently, it is actually at a level which was last seen actually in late 2023. Next, we look at the home sales data, which is also another indicator that some economies track. And here we see that in terms of the March home sales, it fell by close to 6%, which is the sharpest pace since November 2022. So while investors are still hoping that we will see some positive news on the trade tariff, in the meantime, consumers seem to be holding back on their spending. Businesses seem to be more pessimistic in terms of the activity levels. I mentioned earlier that I'll be keeping track very closely for the 10-year government bond yield in the US. The positive news here is that we are also seeing some signs of moderation in the US 10-year bond yield. now at about the 4.25% level, having eased from as high as 4.5% back in April, at the start of April, when the concerns about the trade war was particularly elevated. Okay, moving to the STI performance, we saw that the STI had gains in the past week, and there were a few names that had gains of above 5%. In fact, Hong Kong Land was up by 12.6%, Jardine Matheson up by 8.1%, and then we have a few of the industrial names, Keppel up by 7%, Yangzijiang Shipbuildings also close to 7%, and Seatrium by 6.5%. In terms of the worst performers here, we see Mapletree Logistics Trust down by 4.2% after they provided the most recent quarterly earnings. So that's a name that I want to dive a bit deeper into to understand what is driving the weakness in MLT share price. Okay, so what we see here is MLT share price. Effectively, it had a very sharp fall after the escalation of the trade tariff and when the 10-year government bond yield actually moved up, as well as concerns about the demand for logistics assets, particularly in China. Thereafter, it had a bit of a bounce back to above 120, but now we are seeing this decline once again after they reported their most recent earnings. So what did we see for MLT's earnings? The gross revenue was down by about 0.8%. The net property income was down by about 1.6%. And then the available DPU to unit holders was down by 11.6% to 1.955 cents in the most recent quarter. Okay, if I were to look at the underlying performance of the assets, what we see here is that the occupancy rate for the assets came down further to 95.9% as of March 2025 from 96.3% in December 2024. Okay, this is for the Singapore portfolio. So we see some weakening in terms of the Singapore portfolio. Where it continues to be particularly weak remains to be some of the overseas assets. In China, we see that the occupancy rate is at 94%. So that is something that continues to weigh on the overall portfolio occupancy, which was at 96.2% as of March 2025. Okay, if I were to look at the rental reversions, once again, this is where China remains the drag. We see negative reversions of 9.4%. So as a result, the entire portfolio reversions was at 5.1%, while the portfolio excluding China was at 6.9%. If I were to look at the balance sheet of Mapletree Logistics Trust, at this point in time, the leverage ratio has climbed further to 40.7% versus 40.3% as of December 2024. The interest coverage ratio, however, has stayed constant at about 2.9 times, unchanged from December 2024. Okay, if I were to look at the valuation of MLT now, given the sharp fall in the share price, price to book valuation of 0.86 times, which is below the historical average, as well as the sector average. At the same time, expected dividend yield of about 7.1%, which is above the historical average. Okay, next I'll look at Mapletree Pan Asia Commercial Trust, which also reported their earnings in the past week. Likewise, we saw this sharp fall after the announcement of the trade tariff, some recovery thereafter. But for Mapletree Pan Asia Commercial Trust, we did not see such a sharp decline after they reported their earnings. Okay, so what we saw here in terms of the net property income, it was down by 7.4%. To 170 million in the fourth quarter, which is the quarter ending March 2025. Okay, overall distribution down by 14%, and the distribution per unit down by 14.8% to 1.95 cents. Part of the decline was also driven by a divestment that it did, which was for Mapletree and Sun. So with the divestment of the asset, it was no longer contributing to the net property income. Okay, so this is what we see here in terms of the contribution to the NPI, 172 million in the latest quarter, which is down compared to the previous year. And if I were to look at the contribution from other Singapore properties in particular, now at 13.6 million versus 21.2 million last year, and that partially reflects the divestment of Mapletree Anson, which contributed 7.8 million of NPI in the previous year. Okay, if I were to look across the portfolio of assets, what we see here is that the occupancy rate of Mapletree Business City continues to decline, now at 91.2% versus 96% as at 31st March 2024. Okay, and if I were to look at, say, the Japan properties, this is particularly weak as well, now down to about 80% occupancy rate versus 98% as at 31st March 2024. So with that, the occupancy rate of MPAC's portfolio is now below 90% at 89.6% versus 96.1% as at 31st March 2024. Likewise, if I were to look at the rental reversions, we see negative rental reversions for Festival Walk in Hong Kong, the China properties, as well as the Japan properties. So all in, even though VivoCity did particularly well with a 16.8% positive rental reversion, with the negative reversions in some of its overseas properties across the entire portfolio, they were just able to enjoy a positive reversion of 3.6%. Okay, if I were to look at the balance sheet of Mapletree Pan Asia Commercial Trust, this is where we have seen some in the gearing ratio, now at 37.7%, following the divestment of Mapletree Anson. Okay, once again, if I were to look at the valuation here, price to book of 0.7 times, which is below the historical average, as well as the sector average. And if I were to look at the dividend yield, close to 6.6%, which is above the historical average, as well as the sector average. Last but not least, I just wanted to briefly touch about CICT. This is one of the more resilient REITs in the market, given that it has got a portfolio of both retail as well as office assets, as well as that most of the assets are actually based in Singapore. So you don't see that much of a negative impact coming through like what we saw for Mapletree Logistics Trust, as well as Mapletree Pan Asia Commercial Trust earlier. Okay, so what we saw for CICT is that in terms of the gross revenue on a reported basis, down by about 0.8%, and likewise net property income down by about 0.8%. Okay, this was partly due once again to the divestment of 21 Collier Quay. And assuming it is on a like-for-like basis, then the gross revenue for the remaining portfolio will be up by 1.1% and net property income up by 1.4%. If I were to look at the occupancy rate, this is where the occupancy rate for CICT has still been relatively resilient, 96.4% as of March 2025 versus 96.7% as of 31st December 2024. And what we see here is that the occupancy rate is fairly resilient across retail, office, as well as integrated development. Okay, in terms of the balance sheet of CICT, remains strong, aggregate leverage of 38.7% as of 31st March 2025, interest coverage ratio of 3.2 times, so that remains healthy. Okay, if I were to look at the valuation of CICT, now 1 times price to book, which is close to the sector average, and dividend yield of about 5%, which is in line with the historical average. Okay, so while this is a relatively short trading week, we've got quite a number of key results that are coming out. We've got a number of REITs that continue to report their earnings, including CapitaLand Ascendas REIT, Fraser Centrepoint Trust, Mapletree Industrial Trust. So those are things that we'll continue to keep a lookout for. Okay, we also have quite a number of companies going ex-dividend this week, including UOB, Keppel. So those are the names that we'll see together with a few others, including Mapletree Logistics Trust, Semcom Industries, as well as Suntech REIT. Okay, so with that, I'll hand over to Sunny, who will go through with us the technical analysis. Sunny, over to you.
Okay, thanks Gerald for that update on some of the REITs and business trusts on the Singapore market. So indeed, there is a lot of earnings results coming up from the Singapore side. So there's a lot to look out for, even though we have a shorter trading week and election coming up. So let me start today recap of the indices with the Singapore market first. So as you can see, Singapore did perform very well in the past 1 week or two, I would say. And we have actually rebounded from the low of around the 3,372 points. We have now went back up to the 50 days moving average, which is the blue line that you see here, around the 3,834 points. So today on 28th April, Monday morning, we are down about 0.6% or 23 points, and we are holding very closely to the 3,800 handle right now. So where is the STI likely going to head in the coming weeks? Some of them will be dependent on the results that is coming up, including a UOB, which Gerald mentioned just now. But I think with the shortened trading week, the full action might not come in until next week because we have the election off in lieu, or some of them have a holiday on Monday as well. And some of the parents have a home-based learning on Friday. So there might be some attention taken off the Singapore market. So looking for the next catalyst of the STI index, which may not come until next week, I think the range of where the STI movement will likely move, the 100 days and the 50 days moving average, the blue and amber line, would now be the resistance that we are looking at right now at 3,800 or 3,820 points. That will be where the resistance is. And I believe support will definitely come in again when we push against the longer term moving average, which is the 200 days moving average, now at the 3,677 points, or we will say round it off to the 3,700 points. Okay, so the STI movement is expected to move around the 3,008 to the 3,007 points movement in the coming weeks. And if you look at the indicators, right, the MACD has already shown that today's trading session, the uptrend momentum that we have seen in the past 2 weeks, I would say, has been sort of a subsiding. So it does not mean that it's coming down, but then the uptrend momentum is weakening. Hence, it might go into a range-bound kind of formation going forward. And that's what the MACD indicator is suggesting to us right now. On the RSI indicator, the latest reading this morning at 52 points is also just 2 points above the 50-point neutral mark and has starts to trend down. So that could mean that the uptrend momentum is definitely getting weaker, confirming what the MACD is saying. And if it hovers around the 50-point neutral mark, then definitely there is no momentum and no direction on where the STI index points might be moving, hence suggesting another indication that the STI index might be in a range-bound or horizontal movement in the coming weeks. So that said, the support for the STI index around the 3,700 points level and the resistance around the 3,800 points level. And this is where the STI index will move, depending on the results, depending on some of the comments from Donald Trump and how the global trade tariff war progress from here. Okay, so next, let me move to the US indices. So, but let me share some of the key comments that were made by the US or Donald Trump over the past 1 week. First thing first, Donald Trump did say that he would consider it a total victory for US if, let's say, a year from now, next year, tariffs stay around the 20 to 50% level. So market take this as a very positive signal, and hence we have a very nice rally last week as shared by Gerald earlier. So this 20 to 50% is actually a very big step down from what we are seeing right now or what was proposed in the beginning of April. Donald Trump further even said that in the coming next 3 to 4 weeks, he expects a lot of announcements, a lot of trade deals to be done. And one of those that could be coming up will be Japan. He said that Japan is coming very close to a trade deal. But then on the Asian side, on the Chinese side, there was some controversy because the Chinese administration said that they have not started any trade talks with US. So that caused a bit of a knee-jerk reaction in the market, in the global markets. But nonetheless, markets still take it overall as a whole that Donald Trump is softening, or US softening its tone greatly from the tariff that was announced earlier, and hence there was the rally that happened. Okay, so the Dow Jones Index is now at the pivot point. We are now tracking the 20 days moving average, which is around the 39,980 points level. So Dow Jones Index just managed to close above the 40,000 point mark. So that is the pivot that we are looking at. Okay. Next resistance level, of course, you see the blue and red line over here. That's the 50 days moving average at 41,671 points. With the 200 days moving average definitely giving a lot of a key resistance level over here at the 42,207 points level. The previous time we tested this level, which is the long-term moving average, you can see here, the Dow Jones Index have a lot of seller coming in, a lot of selling pressure coming in that pushed down the index further on top of those negative news that was announced. Okay, so this time around, if let's say it was to rebound back to the longer term 200 days moving average, it will be wiser if you are in the Dow Jones Index to take some profit off the table and look for further directions of where the index might move. But this is the key resistance level to watch. We are now at the pivot point level of 40,113 points, with the low bound of the Bollinger Band coming in to support at 37,360 points. Okay. Next, let me move to the S&P 500. S&P 500, despite all the news that we talked about earlier, has rebounded above the 20 days moving average, and we are also moving towards the S&P, the 50 days moving average at 5,636 points, with the long-term moving average at 5,746 points. So same thing here, 5,746 points is the level that we want to watch, not only because it was tested in the later part of March and then it went down exponentially, but also now it has converged with the upper bound of the Bollinger Band at 5744 as well. So there are different technical traders that might come in to short or take profit or short the market over here, because if you are using the Bollinger Band to trade, you hit the upper bound of the Bollinger Band, that is a sell signal. You hit the longer term moving average, that is also a sell signal. So I expect a lot of sell signal coming in at the 200 days moving average at 5746. Indicator-wise, MACD is showing a very strong positive reading going into the earnings seasons, as well as being aided by some of the trade headlines of the softening of the global trade tensions. So that's why we have crossed above the 20 days moving average, and that positive momentum recorded in MACD suggests that we still have the momentum to push towards the 50 or the 200 days moving average at 5636 and 5746. RSI reading now at 53, 3 points above the 50-point neutral mark. So it's still a above neutral reading. So there's a positive reading, I would say. But then that momentum is not very strong. Hence, if we reach some kind of resistance level, that is the point that you will need to watch out to see if there is any turn in the direction of the momentum reading, either from the RSI or the MACD indicators. Okay. Lastly, let's move to the tech-heavy Nasdaq Composite Index, which was the best performer among the 3 US indices. So a lot of big tech companies that will be reporting this week: Apple, Amazon, Meta, Facebook, Microsoft, all will be reporting. And one point to note is that this coming results, right, is what happened in the last quarter, so in Q1 of 2025. So they will likely not be impacted by the tariff or the trade war that started in early part of April. So that will not reflect in the current results. So even though they might report fantastic results, the market might still discount them given how the trade negotiations are moving. Okay. So the Nasdaq Composite Index actually rallied how much? Let me recap. Rallied about 6.73% last week, and hence we have pushed up above the 20 days moving average, going towards the 50 days moving average. That's the 17,733 points level, with the next immediate resistance level at the 17,949 points. That is the black line, which is the Bollinger Band upper bound. Okay, so the 18,338 points, which is the longer term 200 days moving average, would then be the final resistance level in the near term for the Nasdaq Composite Index, I would say. And if I'm going to round off this 3 resistance level, then the 18,000 handle will become a very strong selling point if there is a long-term moving average, if there's a downwards pressure on the Bollinger Band. Then also the 50 days moving average might be trending downwards to push it down further. then the 18,000 handle will be a very strong selling point that a lot of technical traders might come in, okay, to take a short-term profit before maybe they want to reaccumulate back at a pivot at a 20-day moving average at 16,629 points. Or let's say if there is negative development in the trade negotiations, then definitely we will go back down to the 15,000 level, where the lower bound of the Bollinger Band is now at 15,310 points. But on the indicator side, the MACD is showing strong momentum, nonetheless, because of the big jump in the Nasdaq Composite Index last week. And the RSI is also looking most positive among the three major US indices with the reading at 54. So that trajectory is still pointing downwards compared to the Dow Jones Index RSI, which is sloping downwards. Okay, so that I would say would be a more of a confident momentum reading that the uptrend might still have legs to continue to go up further, which could be pending some of the key earnings results from the Magnificent Seven names that will be reporting this week. Okay, so these are the updates that I have this week. Anything else to add, Gerald?
Yes, so while it is a short trading week, we have to keep our eyes on the earnings that's coming up both in Singapore as well as the US. And we hope to be able to provide you with updates on these earnings in next week's weekly market review.
Yes, so we will still be back on next Monday, even though some of your children might be on school holiday, but we will not be. We will still be back here on the weekly market review and update you with some of the latest earnings results that will be happening on the Singapore market. So in the meantime, have a good break for this short trading week, but of course, keep one eye on the market, and we will see you again next week in the next weekly market review. Goodbye.
See you.